Thank you, everyone. First off, I just want to apologize on Jocelyn's behalf. She unfortunately was unable to make it this afternoon, so it will just be the three of us for this panel. Oh.
She's sending her artificial intelligence robot, so just watch her.
Exactly. Exactly. So I hope everybody...
It's hiding somewhere. You just can't see it.
So I hope everybody's having a good time. Hopefully you guys have all had some enlightening moments. I have to say I found the last panel particularly enlightening. In a past life, I had Jerry Newman as an investor, so apparently I just found out I'm highly neurotic. So with that, I'd like to introduce our two panelists here. We've got Sanjit and Ankit from Intel Capital and from Gradient Ventures. To start off with, you guys represent two of the largest firms in the Silicon Valley. We'd like to start off by talking a little bit about the investment thesis of each of your respective funds, how that relates to the parent company, and how you look at the space of AI.
Sure. Thanks for having me here. My name is Sanjit Dang, Investment Director at Intel Capital. Intel Capital, as the name tells you, is the venture capital arm of Intel Corporation. We have, as a firm, we have been around for over 25 years. We invest roughly $400 to $500 million in startups every year. That makes us among the largest VC funds, at least in terms of dollars deployed. If you translate that into a fund, most funds, as you know, are over 5 to 7 years. That would make it easily over a $3 billion fund. And we have been investing at that pace for at least a decade, a little more. We invest for a mix of strategic and financial reasons. And if we find a deal that is very highly strategic but not financially attractive, we'll let the business unit do the collaboration agreement. We as Intel Capital won't invest. We have to make money. At the same time, we also don't invest in a coffee shop company, for example, unless there's an AI piece in it. So it has to make, at the big picture level, it has to make sense for Intel as a company. And Intel is a very horizontal company, loves compute locally and in the cloud. So wherever we find opportunities that are compute intensive across verticals, we're all for it. Increasingly, our investment focus is in areas like artificial intelligence, big data, cloud, IoT, and you name it. I would say it's probably fair to say that the only sector we don't invest into is like life sciences or medical science. We do invest into healthcare as well, but more from a technology and data standpoint. Most entrepreneurs don't know this about Intel Capital, and something that I end up educating again and again to entrepreneurs, so I'll mention it here. We tend to lead 60 to 70% of the deals we do. So we do our own diligence, we do our own homework on the company. We'll put our term sheets as well, and we take board seats, so we're very active on that. Our investment thesis has been around a dollar plus value equation. Yes, most smart entrepreneurs, like the ones in the room, can get dollars from a lot of VC firms. We try to differentiate ourselves on the value we are able to provide. And we do it in a pretty structured manner. We have a biz dev team within Intel Capital. Their role is only to help our portfolio companies with customer introductions, partner introductions. We do what is called Intel Capital Technology Days. We do them like twice or thrice a month in US and abroad. So for example, if we're doing a retail ITD, we'll bring in CIO of Macy's, and we'll bring in 5 or 6 of our portfolio companies in retail. And we'll do that matchmaking session, 1 hour. Each of these gets to present for 1 hour to the CIO level person. And that's of huge value add to the startups and portfolio companies that we have. Because otherwise, for startups, it takes forever going through the neighbor's friend's cousin to get to the CIO level. So, and particularly on AI, we look at it as not just as another new technology that is coming up. We look at it as a lot more transformative than that. In fact, our thesis is that over time, this will have the kind of impact that internet had on the world. And it will be ubiquitous. It will be around us. It will be more like electricity. You don't even ask whether there is electricity in the room. It will be everywhere. And hence, our thesis is, let's look at companies that are true AI companies, bringing some differentiation, but lasting differentiation, largely in the form of data, because AI is also getting little commoditized as we speak, open source as we speak. So AI algorithms are available to most entrepreneurs. The question is, how can you tune them for your use case? And how can you defend your company in the long run with data? Because we really believe data is the new oil.
Perfect. Ankit, tell us a little bit about Gradient Ventures for those who are not familiar with it.
Cool. Thanks for having me. I'm Ankit Jain, one of the founding partners of Gradient Ventures. It's Google's new AI-focused early-stage fund. We invest $1 to $10 million in seed, Series A, and in some select Series B companies. When we were thinking about starting another fund under kind of the Alphabet umbrella, there's already GV, there's Capital G, the Growth Equity Fund, and then Google selectively does investments directly as well. We really thought about very hard about, is there the need for another fund, not just in the Valley, but within kind of the Alphabet ecosystem? And if we were to start it, what would make it truly a value add? So the first thing that we're doing is we're very much following the GV model in that Google is our LP, but it's not a strategic fund in that we're not investing for any strategic benefit to Google other than investment returns, which then means our investments are purely financially driven. The companies that we invest in are AI focused. So that means they're horizontal companies that are helping enable others to use AI more effectively, or vertically integrated companies in specific verticals. Whether it's healthcare or agriculture or banking or AR or VR, there's applications of AI almost everywhere that are popping up. There's a few interesting trends that I'm sure we're going to dig into, but in the last few years, I think to most people in the room, AI probably equates with deep learning. Most of us, talk about understanding images, understanding audio and video, understanding text. But to those of us that have been in the field for a while, AI is always what's on the frontier. 20 years ago, AI was search. Then it became collaborative filtering and recommendation engines, and now it's deep learning. As we look forward, as a fund, we're getting excited by topics like generative models and generative learning. As humans, we do two things. We understand the world around us, but then we add to the world around us. So far, AI has been about understanding the world around us and making decisions based on it. But one of the next waves of AI technology is going to be being able to add to the world around us, whether it is creating art, creating audio, creating literature, or just creating computer programs. And a lot of that is to be seen. So, we're very excited about these early stage companies. It's a very early stage for AI, and excited to talk more about it.
Fantastic. Well, I think, to the comments just made, AI is on the verge of being absolutely transformational, but also everywhere. So as investors, are there particular verticals that you're looking at, AI for X, that you think now as we move through the natural cycle from infrastructure through to vertical specific AI, that are areas that your fund is looking at in particular? Maybe we'll start with Ankit.
Sure. So how many of you guys in the last 5 years heard the terms big data? Okay, a lot of you guys. How many of you guys heard IoT? So what's happened is as an ecosystem, we've really enabled the calibration of all of these different fields, whether it's our houses with connected devices, whether it's agriculture and farms with all the sensors that were put out there, or our cars with all the latest calibration on there. And what the AI layer on top of that is using that data to start making smart decisions. And so as a fund, we're looking at verticals where in the last few years the industry has been calibrated well, the data has been collected but not really been taken advantage of as much as the new algorithms enable it to be. We're going after those, as well as the new kinds of sensors that are being created. There's in the autonomous world, almost every week or two we hear about new kinds of sensors to understand the visual world around us.
Fantastic. And Sanjit?
I think from an Intel Capital standpoint, we are looking at several areas in terms of AI applications. And that includes autonomous driving, that includes retail, e-commerce, healthcare. But if I look at it from an entrepreneur standpoint, today you need data as step one to be able to train your AI engines. Where is the data most readily available? That's consumer data social networks, retail data. So that almost tends naturally to building an AI use case as the first use case to go after. So we're seeing a lot of companies trying to do that. Then next is healthcare, even though data is regulated, but there's data behind the firewalls available to be able to train the engines, and the impact is enormous. If you can, there are companies that are able to use an iPhone camera and do at least first level diagnostics that equipment worth millions of dollars does in hospitals. That's transformative, and that needs a lot of training, but that also needs a lot of object recognition from images. And if we are able to detect early signs of cancer, for example, or early signs of an eye disease, somebody was talking to me earlier about an eye disease company, early eye disease detection, those things have huge social impact, but also huge financial potential. So we're looking at a lot of those areas.
And that's a great point to make. So the availability of data as it relates to machine learning, AI, and related technologies is crucial for success. If we're talking about these technologies, you have to have a sufficient amount of data in order to train the models to build the technology. And we have something of a paradox in that in certain fields, such as consumer, autonomous vehicle, we have sensors or mechanisms that generate massive, massive amounts of data. On the other hand, some of the areas where AI has the biggest potential, life sciences, disease recognition, disease treatment, the amount of data available is inherently restricted by, for example, the population of the planet. How do we push forward technologies that could have transformational impact on us as a society when there might not be enough data available, or that data might be highly regulated?
Yeah, I think the data is available. The problem is your last comment. The problem is data is regulated. And this is actually, if we use healthcare as an example, I always believe that, as an investor, healthcare and education, they're massive markets. And look at the percentage of US GDP that is spent on both of those sectors. But they are not the first ones to embrace innovation. In fact, if I use education as an example, it's almost shitty to, as a startup guy, to create a company to disrupt education, because you have to sell into unions and school boards and all that stuff. They're very regulated markets. Same, if not same, but very similar characteristics apply to healthcare as well. So the problem is not data, the problem is data regulation. And you're getting into PII, you're getting into very sensitive data. And yes, you can anonymize, you can do a lot of things, but it's tricky. And there are HIPAA compliance regulations. It's just too much. And I think we as a nation, and I don't want to say White House needs to take a leading role here, but we as a nation need to push the envelope on that if we want to make a transformative impact on things like healthcare. We need to open up that data. And the reality is, I think it's been proven now, all of our data has been hacked, period, right? There are only two types of companies out there. Companies that know that they have been hacked, companies that don't know they have been hacked, period, right? There was a time when I used to feel consumers don't care about data leaks till they lose financial information. I'm even past that theory now. So I actually feel that even our healthcare data has probably been hacked, but it's okay as consumers. So I think we need to internalize the new world order of data, and rather data leaks. And instead of yes, we need to create securities and new technologies to prevent that, but at the same time, if we can do better, create a better channel for using the data to create better solutions to solve the problems, I think that's the right approach.
I think to add to Sanjit's point, there's a couple of other kind of aspects to this. I think there's a lot of new algorithms and breakthroughs that are happening to get around the need for as much data or as much of the same kind of data to help our computers learn better. In the autonomous driving world, there are some companies that did not have the kind of training data or sensor data that some of the other larger players had. And so they simulated, using reinforcement learning, they simulated the first set of data on Grand Theft Auto 5 because they were able to get a first model built off of video games before they brought real cars on the streets. And I think that kind of creativity, that kind of hustle, we always talk about that in the investment community, is needed even in industries where data is not as easy to access. And then there's new models of new ways of learning that are coming about. Google wrote this one paper on federated learning, which allowed models to be built where the data is. So traditionally, when you build an AI model, you bring all the data to one centralized place and you build the model. Instead of, what if you could send the model to the data? And this is actually very applicable in the field of healthcare. Hospitals or different institutions have silos of data which they don't feel comfortable mixing for many reasons. The formats might be different. The privacy regulations across countries or across different institutions might be different. So what if you could send the model to the institution, it learns locally with the data, then sends back the learned model to the server, which then goes kind of institution by institution, and everybody benefits from everyone's data without actually sharing the raw data. It's still very early in some of these new fields of research, but I think they're promising, and I think they'll solve some of these limitations that are there today.
And what about the difference between startups and incumbents when it comes from access to data? So, referring to your parent company, Alphabet, Alphabet and Google in particular has a massive wealth of data on all manner of things. So, it goes without saying that they've got a ton of data with which they can train various systems on. Now, for the past 5 years, we started to move into this era of APIs where companies were starting to make available their data for use cases and partners and value-added services. And in the last year or two, we've started to see the first few cases where companies are actually closing that door a little bit because they're once again seeing data as a commodity. If you're a startup, and this is maybe putting on your I'm not a part of the Alphabet family hat, how do I go and build some disruptive technology in an area where an incumbent might have massive advantage in terms of data?
I think it's a fair question, and I think Google and many of the other large companies are actually taking kind of the first steps to unlock pieces of data. So I know the Google research team has done a lot of work to unlock YouTube videos which are very well labeled or transcribed, or Google image sets which have a lot of labels so that others can go and learn on top of them. And I think that's going to continue not just from Google but also from many of the other companies. From a startup perspective, I think it's always been kind of David versus Goliath. I don't think AI or data is the first time this is happening. If you wanted to start a new financial institution, you always worried about the big banks and the fact that they have all the users and all of their past history. And I think it's going to be the same here. You have to, going back to my previous point, have the hustle to figure out how do you break the chicken and egg where you need the data to build the first model to then kind of go back and do that. And I think it depends on the startup, on the vertical, how you go about kind of building your first model and getting to market.
Sanjit?
I agree with what Ankit said. To add to what he said, it really varies by vertical. For example, Twitter gives out its data as, what is it called, garden hose, I forget the name. Yeah, garden hose API, right? There are companies we've actually looked at in social and data analytics space, startups that we have looked at in that space that just rely on that data stream from Twitter. And they're able to do a better job than Twitter itself on data analytics and applying AI to it and creating better marketing campaign than what Twitter can recommend. Right? I can give you examples. Mass Relevance is one company. Spreadfast is another company. Sprinkler is another company. None of them had to worry about data access. So it really varies about varies vertical to vertical. Now, if you get into autonomous driving, Tesla has a lot of data. Their cars already have cameras. They're collecting data every day. Each of you who drives Tesla, you're actually sending the data to the cloud, to Tesla cloud. So they're collecting the data and they're using that to improve their autonomous driving capability every day. Now, will they make that data available to a startup? Probably not. Right? So it really, the answer, it's not a one-size-fits-all answer, the data question. It really varies vertical to vertical.
So continuing along the theme of David versus Goliath, one of the things that we're seeing, particularly with AI, is significant competition coming from outside of the Silicon Valley. If you read The Economist or any major publication, there's a lot of talk about what's happening in China and Russia in particular in terms of the amount of money that the governments are pouring into AI in order to develop capabilities there. We're seeing even near countries like Canada, who in Montreal have massive, massive centers of excellence. Why is that happening now? So in 20, 30 years of areas trying to be the next Silicon Valley, we're suddenly seeing that take hold. What's happening? Sanjit?
I think companies and countries are realizing that AI will redefine the geographical boundaries of the world. And they are trying to rise up and say, hey, look, I have massive population and hence I have massive data sets, and hence I can create the right set of AI companies for myself, for my country, and then for the world. And it's going to be a war of data and AI. And if you look at, you mentioned Russia, you mentioned China, if you start comparing some of these countries, I don't want to get into politics, but some of the cross-country data hacks that we are seeing, they're not just to impact probably the elections. There's a data play there as well, right? And if you compare, for example, the top two most populous countries, India versus China, China is a very closed-door system. Google doesn't run there. Facebook doesn't run there. They have their own apps for search, for chatting, everything. Companies like WeChat, etc., Baidu, etc., are running there. And that data is all within the Chinese firewalls. You compare that to India, Facebook and WhatsApp and Amazon and Flipkart, which is like another Amazon, all of these companies have access to the data. So a lot of the data is actually going outside India. So you almost can compare and contrast the data approach of both of these countries. And hence, you can even see who has an edge in building the next generation of AI companies. China, we are already seeing a huge flurry of AI companies. In fact, the pace at which they are growing the number of AI companies will probably overtake US in the next few years. And gone are the days, we sitting in Bay Area, we think Bay Area is the world. We're always mistaken by that. We live in that mental stigma, I feel. You go to Asia, it opens up your eyes. There's innovation happening. The world is flat today. And it's not even fair to say that US innovates, rest of the world copies or implements. Everybody innovates today. Everybody who can or who is pushing innovates today, period. And whosoever has the push at a national level, has the data access, will win the game.
I think the other reason that I think AI is much more global than some of the previous phenomenon in technology especially is because it's not a new field. The latest breakthroughs, especially deep learning, were first hypothesized and talked about and written in papers 25, 30 years ago. And there's been centers of excellence and universities and labs doing research in each of these fields for 15, 20, 25 years. And a lot of those experts have been talking about their ideas for a long time without really seeing the impact that we now see because of breakthroughs in hardware, because of breakthroughs in the way we can process in the cloud, because of access to data. And so all those experts are getting together and really trying to show the impact of all of their years of research and every idea that they have, whether it's Jeffrey Hinton in Toronto or Yoshua Bengio and team in Montreal or the teams in China and Russia and Israel. These are all folks that have been thinking about how to apply these different mathematical functions for a very long time. And all of these ecosystems have a few things in common. They have a very strong research communities. They're very strong math, statistics, and algorithms communities. And they've been waiting for a long time to apply them. And finally, they have the ability to do so. And I think Silicon Valley and both, I think Amazon, Google, Microsoft, all these companies have enabled these research teams to now go at full speed because of their cloud services, and we're seeing that happen, in the last few years. And I think it's great. It's causing a lot more competition. It's causing a proliferation of new ideas, and folks wanting to disrupt themselves. In the consumer world, we often say the most successful consumer companies succeed because they continuously disrupt themselves. The same thing is happening in the world of AI research. A lot of the AI researchers are saying, my last paper was interesting, but wait till you see my next one. And in the time frame between these papers, instead of being years or multiple years, is months. And in every single AI conference, you're seeing breakthroughs that are incrementally but definitely moving us forward.
And you mentioned Toronto, and I'll broaden that to the Toronto-Waterloo corridor. You mentioned Montreal. For the benefit of the audience, what are some of the other centers of excellence that you see developing in AI research?
We're seeing a lot of activity around Cambridge and London. We're seeing a lot of interesting companies in this, especially in the security space, that are applications of AI in Tel Aviv and around Israel. And as a fund, we haven't spent too much time in China yet. But we're hearing there's a lot of activity there, and excited to learn more about it.
And Sanjit, do you have some others?
Yeah, I think CMU is another center of excellence. MIT, Harvard corridor, definitely. I think in general, some of the universities they've had AI labs forever. It's a new thing for startups. It's a new thing for VCs, honestly speaking. It's not a new thing in universities. There was an AI lab when I was in grad school at University of Illinois. So it's not a new thing there. For professors, it's continuous research. But now they're finding true applications, and applications that can go massive today.
And I'd add to that, a couple of other areas that we've seen. Edinburgh has a lot going on there with the data lab, and also a significant amount of talent coming out of Eastern Europe now. So I think, for the audience here, there's a lot of talent and a lot of really interesting companies that are starting to come globally. As a reference point, with 500 startups last batch, we did our first data track. We had 7 companies from 7 different countries. So I think that gives a little suggestion of what we're seeing around the world as well. So looking forward, so we talked about kind of some of the things that you guys are investing in right now. If we look ahead, 3, 5, 8 years, as this technology really starts to go faster, the research comes hard and heavy, countries continue to pour more into it. What are some of the areas that you guys are looking ahead to in terms of either investments that you're thinking of making now that may come to fruition, 3, 5, 8 years in the future, or just things that you think, AI is going to have a fundamental impact from kind of the ground up? Sanjit?
I think transportation is one sector we are heavily looking at. Intel acquired, as you know, Mobileye for over $15 billion this year, largest acquisition in Israel. So autonomous driving is a big focus for Intel as a company. So we are definitely looking at companies that are enhancing what we as Intel can already do. In addition to that, I talked about retail, e-commerce, healthcare. So it and then also bringing AI to data center infrastructure, being able to apply that at the infrastructure level layer, it can be very disruptive.
Ankit?
So there's 2 areas that I've been spending a lot of time kind of digging into, because I think we talked a little bit about this, where traditionally AI models are run in the cloud. So the data has been going to the cloud. You run it there, and then you make inferences either in the cloud, actually mostly in the cloud. But think about all of the connected devices around us. Think about all of the unconnected devices around us that could be connected, whether it's all the cameras, whether it's all the mics, whether it's all the smart home appliances that are there. What if your AI applications could run at the edge? It's an area that a lot of startups are starting to think about, but if you think 3 to 5 years from now, I think a lot of the latest AI algorithms will be running at the edge. This brings a lot of power efficiency. This brings a lot of efficiency on the bandwidth side. It brings privacy in a lot of cases, and it allows a lot more interactivity and real-time nature of applications. If you think about retail stores as an example, if every one of the cameras in there could be processing the people going through the different aisles, this is the vision of the next generation of stores. You could do checkout without having a register, or you could do inventory management or refilling of all the aisles, because you know where the inventory is being taken away from, where it's being put back. You need to reorganize things because you picked up toilet paper on one aisle, but then you decide you don't want it, so you leave it by the groceries. You can send it as needed. So I think edge computing is definitely one. The second one I briefly mentioned was generative learning, whether it's being able to create content. An example I've recently been thinking about is stock photography. There's a few big players that are doing stock photography, and you pay $5 for an image that you want for your website if you want it on a non-exclusive way, and you pay some crazy amount if you want it exclusively. But what if you could go to an AI-based system and say you'd like a South Asian male between 30 and 40 holding an iPhone at the beach, and it generated that for you, and you can get that kind of unique image for your website. It sounds kind of crazy, but I think with the kind of research that's happening, generative models could go and disrupt. That's not necessarily the biggest industry, but it's an example of an industry that it can go after and disrupt. Or there's a company down in LA, I'm forgetting their name, but they're creating an avatar of yourself. So let's say I'm at work and my kid's at home and crying. My voice can be singing a song or reading a book to the kid to pacify the kid, because he'll think that I'm around. And I think that's the kind of impact that we can have by being able to recreate human experiences using machines.
That is both fascinating and totally creepy. I'll ask you guys each one more question, then we can go to audience questions. When it comes to areas of AI or applications of AI, can you name one each that you think is underrated and overrated?
So I think as we think about augmented reality, most of us don't think about it from an AI perspective. But at the heart of it, it's similar algorithms. It's the same kind of data that's needed. And I think breakthroughs in AI will directly affect AR in many ways. And so while we think AR is is far ways away, I think it's going to come sooner than we expect because of breakthroughs in AI. From an overhyped perspective, I think the concept of AI is very overhyped. I think a lot of people today think AI can solve anything and everything, and startups pitching need that one slide that said, "This is why we're AI." And I think I hope that changes.
I think one area where AI can have a huge impact is manufacturing itself. And we do see startups here and there trying to do it, but it's not a sector that is in the top 2 list for most investors. And if you start looking at it within the manufacturing sector, you have data coming out of every machine. And can you use that data to be able to predict when that machine will fail? Can you predict in advance? I think it can bring tremendous manufacturing efficiency, reduce costs, increase output. The impact can be tremendous. And look at the sector. That sector is just huge across the world. So I think that's one of the underrated sectors. AI in general is just way too overhyped. And I think as an industry, we tend to grab onto some buzzword. It was cloud, it was big data, this was IoT, which still is there, and then AI. I think, and what has happened is overnight, all startups did a find and replace in their startup pitch, to replace big data with AI, replace their .com domain to .ai. I think that hype has to go away, and we really need to get to true AI technologies and true AI business models. AI doesn't really have a big business model today. It's still lacking. Most AI startups don't really make money. So I think we have to get over that, and it will happen.
Fantastic. And I'll echo what you said on manufacturing and extend it. We've actually made a number of investments, not only in manufacturing, but also logistics, transportation,
Yeah.
similar ideas where, predicting failure, some of these sort of less sexy areas, can have the potential for massive, massive savings and impacts on the bottom line. All right, so let's see. First question here. We touched on this a little bit earlier. Will reinforcement learning-based AI alleviate the need for big data? Ankit, you mentioned that a little bit. Maybe you can take that one.
I think when you can get good quality data, it's always useful. I think reinforcement learning-based methods will enable building the first model to go to market to be able to collect more data. In the autonomous example that I gave earlier, instead of starting with a completely random model and putting that on the roads in a car, you can train it on GTA and get on the roads and make some smart decisions. But then you need to be able to collect the right data to then improve on the model. It's kind of like the traditional startup advice, which says launch and then iterate. Reinforcement learning will often allow you to launch and then iterate from there with additional data.
All right. Second question. How much, or do you, and I'll sort of add that caveat, do you value proprietary training data when you're looking at a company? How do you think about that? If you're taking a company and they've got some interesting ML models behind them, what do you think about the data? Sanjit?
We do value that. In fact, like I mentioned, data is a new oil, but I think we have to start slicing it down to the next level. It's not just data. We need to have annotated data. We need to understand what data. I can't just give you a billion images and say, okay, here's the data, go figure it out, go build a model using it, right? If it's not annotated, it's not deciphered, then I can't really use it on day one. So proprietary training data is super helpful, and we tend to look at, what have you done with that data? Number one, do you have an unfair advantage in terms of access to that data, number one. Number two, what have you done with that data? Do you have a better understanding of that data than somebody else?
All right, next question. Interesting ideas to reduce the labeling costs. So other than crowdsourcing, which is a pretty standard way of getting sort of large amounts of data and a quick solution, how else can we get label, clean, large amounts of data? Ankit?
It's an interesting question. I don't know if I have the silver bullet for this one. The one thing I have seen time and time again is I think as researchers or as engineers, we often think we need a lot more data than we actually do, or we need a lot more labels than we actually do. And if we question that need, sometimes you realize that you can do with just algorithmic clustering rather than clustering plus labeling. But again, I think it's a general question. It's hard to answer that in a general way.
Anything you'd care to add, Sanjit?
No, I think he covered it pretty well.
All right. How do we think about the potential emotional and ethical implications of AI? Similar to the avatar reading the child example, I'm reminded of a Black Mirror episode where a grieving woman's deceased boyfriend is embodied in a robot. I'm going to throw that to Ankit since he brought it up.
I think it's an interesting area that we should be very wary of, and we should think very deeply about. I think as Silicon Valley or as the technology ecosystem, we should explore the bounds of what's possible while keeping the humanness about our lives. I think it's easy to go into a world that becomes too digital, and I think especially the ethical side of things, what's possible, the ways we can change our brains, the way we can train ourselves. I think it's very early. These are good questions to ask, and I think they should be debated. I don't think there's a simple answer to this.
I think we'll all be carrying an AI chip here. Well, we may be born with it. The next generation may be born with it as well. On the emotional side, I think the human-machine interface, actually I should rephrase, the human-machine relationship is always an interesting thing to study. There are several studies done where people saying, hey, in times of distress, the human-smartphone relationship is sometimes closer than a human-to-human relationship. Even today, forget AI. And I think as machines get smarter, as we really build an AI machine, that relationship is going to get even closer.
And last question, and for both of you, how do you do diligence, and I won't say the seed level, I'll just say in general, when looking at an AI deal aside from the team, does it differ from other sort of deep tech, capital-intensive types of businesses, and what are the must-haves for you to invest besides sort of the obvious interesting market and things like that? Sanjit?
you know, for an AI deal in general, we look at what's your team strength, what's your domain expertise, what have you really done? And a lot of companies everybody's calling themselves AI company nowadays, right? So it's the noise level is just humongous today in AI. So we really have to screen down to who is the real data scientist on the team, who is the real AI expert, what have you done? And we do a tremendous validation checks on that part, because talent is actually a big part of investing in AI in general as well, but AI definitely. And to answer maybe the question as well on seed level, you know, when you raise funding at a seed level, nothing to do with AI, but when you raise funding at a seed level, you're really talking to the heart of the investor rather than to the brain of the investor. As you get to Series A and B, you start talking to the brain of the investor because you have metrics, you have numbers to show. But at a seed level, you don't have anything. You don't have customer traction, you don't have numbers, you just have a vision, you have an idea, you have an initial team in place. So you really have to build that credibility with the investor to be able to get that seed funding.
It's an interesting question. I think team plays a big role. So I know the question is team aside, but I'm going to add one thing about team, which is for most ideas that disrupt, I've seen that to the world, it's an exponential difference from where the world was before to where the world is with a given idea. But to the entrepreneur that's behind that idea, it's actually pretty linear because of their unique experiences, because of the way they see the world. And getting to the heart of that is a big piece of how we look at any company, not just an AI company. From an AI company perspective, we look at a couple of things. We look at whether there is proprietary data, whether they are thinking about a new industry and being able to collect the data that wasn't being collected before, or use data in a novel way, especially in fields like that are not sexy, like manufacturing or supply chains. There's an investment of ours that's going to come out tomorrow, where at this stage there's actually very little AI. The promise is to have the AI in the next few years, but the first seeds that are being sown are about being able to get the right data set in place. And by the time you get to the Series A, you want to see some of those things. The last thing that we look for is some amount of market validation. So in our diligence, we tend to call a lot of folks in the industry who are potential customers to see whether or not, if the solution existed, it would make a difference, whether they would pay a premium for it being of the kind of solution that it is, that is AI powered, versus what they have in place. Is a rule-based system good enough for them? Is it, what are the intricacies of the model?
Great. Well, thank you very much for your time, both, and I look forward to next year when we have avatars on stage while the three of us grab a beer.
Next time I won't come. I'll send my AI robot.
Exactly. Thank you.
Thank you.